Now we're going to discuss a different topic on the income statement. This one has a bit of a gray area, and it's one that many people are curious about. You may recall that when you're calculating the beginning balance of your asset and liability, you use net lease rents. That means that you don't include anything that is considered an expense. To avoid confusion, I'll point out that in the world of accounting, most people refer to these expenses as SG&A, which stands for Selling, General, and Administrative. But in the real estate world, we usually say building operating expenses. In this context, they are the exact same thing. So how do you decide which is classified as net rent and what is an expense? There isn't always a precise answer, but here's a key question that will help you decide. Is it a service charge that you could obtain separately? If the answer is yes, then you can probably call it an expense. Here are some examples of items that are generally classified as expenses. All base expense amounts for operating expense, utilities, janitorial, maintenance, and electrical, in other words, base year costs, expense stop values, and embedded service costs for full service gross leases. FYI, base expense amounts are recorded even when the base rent is abated. Why? Because they are deducted from straight line rent. For triple net leases, everything above plus insurance and property taxes are considered an expense. All operating expense, insurance, taxes, and electric costs above base amounts, and all triple net and electric costs. Expenses for things like satellite dish fee, HVAC, and above standard utilities. And finally, costs used for reserved and unreserved parking. These are all examples of items that are generally classified as an expense and therefore not capitalized.